Well, will it be a placid day or could it be an active day for the power financiers? That's the big thing, because at 9:05 we bring the big brokerage call of the day, and today we are looking at a note from Morgan Stanley on the power financiers, something that we briefly discussed, but Harsh tracks this closely. He's looked at the note closely, and he joins in to give us the key takeaways. Harsh, good morning yet again.
Well, good morning, Neeraj. So what we're seeing is a 21 to 23% upside is what Morgan Stanley is expecting on an REC PFC. They believe that it's a sector which has suffered and that is unwarranted, because the power sector investment cycle is likely to start to kick through. There's plenty of tailwind with regard to power across the value chain, and there's a large planned capex again across the value chain. Energy transformation is the big story over the next 5 to 6 years. PFC, REC are the key enablers of that energy transition, especially with regard to capex, which is required by the country as a whole. They're expecting low to mid-teens in terms of loan growth. So they're not expecting something dramatic in terms of loan growth. But what they are saying is that is still better than what most lenders are doing within the power space. So clearly, these two are standing out within that space. They're also saying that margins don't seem to be coming off too sharply at all. 3.5% is what they've been all through this cycle, and they get encouragement from that. Stocks are out of favor is what they say. They can continue to deliver low teen growth and a high teen ROE, and that stands out for me, the ROE number of high teens. They're self-sustaining with a dividend yield of around 3.8 to 4.5%. So no fresh capital, no fresh equity infusion, and no fresh dilution required. A zero growth price to earnings of around 5 to 6. FY27 EPS is compelling is what they are saying, and therefore the risk to reward in the medium term looks good. They're expecting an outperformance, risks being loan growth slower than anticipated, higher competition, and asset quality worsening.
Okay, all right, so that's the view on the power financiers, and in fact we did ask Nirav about what he thinks about these, but then we haven't spoken to Shrikant about them. Shrikant, any opportunities here? PFC, REC, IREDA in going to be in focus on account of quarterly results as well. What would you say?
Yeah, we also like REC, PFC at current levels based on their technical formation, because they are in the range, they are not falling below certain levels. But specifically PFC, Power Finance Corporation, is doing much better. It is relatively doing better than REC. And based on its technical formation, I am of the view that the stock is heading for at least 450, 455 sort of levels in the near term. But yes, in the medium term, let's say next 3 to 6 months of time, I'm expecting this stock to cross the level of 500. So, and most of the time, whenever there is a rally in PFC, we see supporting sort of activity in REC also. So broadly, we are of the view that we should look for adding PFC, REC at current levels with a medium term view.
Very quickly, anything on IREDA related space? It doesn't have a note today, but it had a sales note yesterday.
Yeah, there also the stock is in the range. It is not falling whenever there is a weakness in the market, and it has spent a lot of time between the range of 155, 160. Yes, it has hurdled close to 183, 185 levels. But while looking at its entire weekly, monthly pattern, I think it is just consolidating, and whenever there is we can say a better environment, we can see the stock crossing the level of 185 and moving towards its previous high of 230, 235. So the overall pattern of the stock is still intact. We need to be a buyer whenever there is a correction in the stock. Even at this level, it looks quite attractive.
Okay,